Hong Kong's economy staged a robust performance in the third quarter of 2025, driven by a continued surge in exports and sustained expansion in domestic demand. Real gross domestic product, or GDP, grew by 3.8% over a year earlier in the third quarter, picking up visibly from the 3.1% growth in the preceding quarter. On a seasonally adjusted quarter-to-quarter comparison, real GDP rose further by 0.7%. Total goods exports continued to grow markedly by 12.1% year-on-year in real terms in the third quarter, propelled by strong demand for electronic-related products and buoyant regional trade flows in Asia. Exports of services also expanded notably by 6.3% in real terms over a year earlier. Domestically, private consumption expenditure picked up slightly in growth in the third quarter, rising further by 2.1% year-on-year in real terms, reflecting the continued recovery of the local consumption market. The residential property market stabilized further in the third quarter. Flat prices showed a more visible pickup of 2%. The labour market softened in the third quarter. The seasonally adjusted unemployment rate rose to 3.9% from 3.5% in the preceding quarter. Consumer price inflation stayed modest in the third quarter. The underlying composite consumer price index increased by 1% over a year earlier. The real GDP growth forecast for 2025 as a whole is revised up to 3.2%. The government said the Hong Kong economy should see further solid growth for the rest of 2025.
Sustained moderate growth of the global economy in the near term, coupled with easing China-US trade tensions of late and persistent demand for electronic-related products, should lend support to Hong Kong's exports of goods. Continued increases in inbound tourism and vibrant financial market activities should provide further impetus to exports of services. Domestically, the renewed U.S. interest rate cuts since September are conducive to asset market sentiment. Together with the gradual recovery in consumption confidence and steadfast improvement in business sentiment, these developments should help bolster consumption and investment activities. The government's various measures to develop the economy and diversify markets will also provide support.
She added that overall inflation should stay modest in the near term. The forecasts for the underlying and headline consumer price inflation rates for 2025 are revised down to 1.2% and 1.5% respectively.